Hey guys and dolls, and welcome back into the channel. My name is Jason, and today we are going to be talking about some of the issues that have been popping up in the stock market, because the stock market has been running around like a crazy battlefield and there has been blood all over the streets. Now guys, I am here to give you my help and offer from my experience any way that I can give you guys a reassurance. If you look back on history on the S&P 500, for example, every time that we have seen a major pullback, we have been through recessions, we have been through wars, we have even been through bubbles. The stock market has always recovered time and time again. So the question that you really have to ask yourself in this video today is, are you a short-term investor, or in fact, are you a long-term investor? Because if you are a long-term investor, guys, then red days should be good days, because that is when you can lower your risk, and in fact you can either buy the dip, average your position down, and in the long run you are going to be rewarded. Now, what is the stock market doing? Well, it seems that the media absolutely love to blow up negativity, and you guys know that the media have to get stories across so that they can get views, because that's how they get paid from advertising. So they are going to do everything they can. If there is a little weeny bit of drama on the side, oh look, a breadcrumb, they are going to blow it up into a giant messy pie. So that is exactly what is happening in the stock market, to my belief right now. We have seen a transition from growth to value plays. We have also seen a lot of uncertainty and fear over the 10-year treasuries. Also, we have inflation fears, which I did say at the end of this year will actually be priced into the market, because as we get those inflation rates that come out once every quarter, we will then in fact start to realize that the stock market is undervalued, especially in some of those heavy beaten down tech plays and also those innovative disruptive stocks, a lot of the stocks that we do talk about on this channel. Now guys, it is worth noting that you should always have a target when you are entering a stock. So if you are going to buy into a stock, perhaps you have found an interest in a stock on this channel, or in fact you have found interest from some of your own research. If you are going into that play, you are going to want to know where you are going to want to take your profits out. And if you don't have a price target, then maybe it's worth doing one, so that then you know where in fact you can actually sell out of your position and you can actually capitalize on those gains. Because in a chopping market like this, like I said, are you a short-term investor or are you a long-term investor? A lot of people on my channel, I think, have been quite anxious recently due to this recent correction, which to innovative disruptive stocks I would actually call a crash, because there's a lot of the growth stocks, a lot of the heavy tech stocks have actually sold off quite dramatically over the last couple of weeks. So what am I doing on this channel? Well guys, I haven't actually sold out of any of my positions, but if you are someone that is trading very emotionally and you're quite heightened right now, you are not sleeping, perhaps you're very sensitive to your portfolio, then all I can say is perhaps you are a little bit too heavy inside your investments. Maybe it's worth taking some cards back off the table, taking a step back, waiting for the markets to settle down, and then reallocating as much money as you're happy to lose in the markets. And one tip that I can give you guys, the best tip that I can give you from my own personal experience, is not to expect green days. Because if you expect green days every day, especially if it's following on from a week or two of red days, then if you wake up and you look at your portfolio and in fact you are down again by another 2 or 3% on all the plays in your portfolio, that is when you are going to start getting emotional. And guys, it's no good trading with emotions, because you will make irrational decisions which can lead you to sell off some of your stakes in your positions, which in the long term, if you had just stuck it out, just like I mentioned, if you look back at the course of history, despite the fact that we've been through recessions, we've been through wars, we have been through bubbles, the stock market does always recover. Now, it is always worth noting as well, guys, that you should be fully diversified inside your portfolio wherever possible. So if you can have some eggs, say in financials, if you can have some eggs in innovation, and you can have some eggs in, say, cryptocurrency, because again, I do like to talk about many different stocks on this channel so that we can stay as up to date in the markets and we can capitalize on as many plays as possible by spreading out our eggs and having a diverse range of wealth. So that is what we do on this channel. Now, what am I going to do with our plays like NEO that have been beaten down? Well, you guys know, like I just said, the news has been banging on about semiconductor chip shortage for our electrical vehicles. We have also got a lot of bad news that has unfortunately come out with the cargo ship in Africa, but that has now since been cleared up, and it does seem that now there is a lot of margin calls that are coming out. A lot of banks are saying that margin calls at hedge funds hits banks and prompt contagious fears. So guys, that is something that is going on right now. A lot of the banks are very optimistic. They are starting to margin call those hedge funds because some of those positions are very overstretched, and a lot of hedge funds have been buying on margin. And as the banks start to give out these margin calls, if the hedge funds do not respond appropriately and actually give the cash that they need, then we are going to see another further sell-off in the stock market, and that again is going to be in the short term. But in the long term, if you do have that long-term mindset of an investor, are you investing your money for 12 months, 24 months, 36 months, or even a decade, then you will be fine, because in the long run, guys, I can promise that you guys will be rewarded, because companies like Volkswagen and Ford, yes, they will bring out electrical vehicles, but are they in fact bringing them out right now? And we are only at 2% electrical vehicles worldwide. Companies like Tesla, companies like Xpeng, NIO, there are so many companies right now, guys, that are disrupting a major market in the billions of dollars. And you guys know that Tesla could be worth trillions in the future if they actually get on top of their autonomous taxi networks, which Kathy believes that an AI between it is going to be worth anywhere between 15 and 30 trillion dollars. So this is a massive industry, guys. It is going to be absolutely huge, and a lot of these plays are set now for prime time. And as we come into the sweet spot of the S-curve, we are going to see a big push in the coming years into disruptive innovation. And she is a leading example, guys, if you use her Tesla as a past exception, and how she has been so right on all of the key points that has happened with Tesla, and how traditional PE ratios don't matter in the stock market. In the long term, we are going to see a lot of disruption. So guys, that is what I'm doing in the stock market right now. I am not so worried about all of the noise. I'm not expecting green on every single day, and I certainly am not using my emotions to trade. And if I am emotional because I am invested too heavy, then again, maybe it's worth me taking some cards back off the table, setting those stop limits, or if I have some dry powder, averaging down, waiting for those prices to push back up, and then taking profits at break even. So those are a few little tips and tricks from my own experience, but always make sure to do your own due diligence on this channel. As you guys know, I'm not a financial advisor, and I can only tell you what I'm doing with my money. So I'm not so worried about all of this noise. I think the media love to blow up a negative story. I am holding strong because I believe that companies like NIO, guys, are going to be worth triple digits in the very near future. We just have to get through these rocky times when the market is being volatile. We are in a sideways, or say even downwards market in growth stocks, not particularly the overall market, because if you look at the S&P 500 and the NASDAQ, I believe, is actually at all high times again this week. So guys, that wraps up this video for today. All I ask is that you smash the like button, turn it into a beautiful blue, and hit that big red subscribe button if you did make it this far. I just want to say thank you for your continued support. I hope that this message brought you some reassurance. I will get out a new video later on some of our plays, or in fact some of the stocks that I'm definitely not selling during this time, because we have plays like DraftKings, which actually sold off about 9 or 10% almost yesterday. So that is quite a lot for a big player like DraftKings that has recently just seen a big push up to that $70 price range. It is now sitting back in that high-end $50 range. So we do have some nice deals in the market that for the long term could be very nice for us to get our hands into. So guys, I will see you guys back on my channel soon for some more content on investing. Stay safe, and I'll see you guys soon. Ciao.